Alright guys, so this video is going to be a video about ranges and how I mark them out and how I trade them. And how you can obviously trade them as well. So when marking out a range, I tend to mark out the last swing high and the swing low. And what works for me is if I see price wicking through but failing to close above, this confirms my idea of a range high and a range low. As you can see, I like how this candle swept the low and couldn't close below it. So this is a confirmation for my swing low, and these highs are a confirmation for my swing high. Now another confirmation is if you draw on the 50% of the range, or in other terms, if you draw on the EQ, and you see price beautifully respecting this level, then it's another confirmation that your range levels are correct and you can trade based on these levels. So I drew out two scribbles right here, and the first one is a bearish scenario. So let's say if price is reaching up into range high, we will be looking for a short because we know it was previously resistance. So if price pushes up into range high right now, we want to be looking for a short because we're expecting a breakdown again towards range low. So what I want to see is I want to see a high being formed. So as soon as this high is being formed right here, we know there's a pocket of liquidity resting above this high because people that went short right here, and as soon as price starts to decline, they'll put their stops just above this high. So what you'll see is price will quickly reverse, take out this high, and then it breaks structure. So as soon as it breaks market structure, after rating a previous high, I'm looking for shorts. So the best risk to reward is obviously when you can enter on a swing failure and then an immediate entry. But if you miss this entry, this is a great way to enter a trade. So this goes by the way of the premium and discount as well. So let's say we form a high, we form a low, we sweep this high, and then we break structure. We pull up our fib from swing high to swing low and we want to be entering around the optimal trade entry. So let's get rid of this. So this scenario is what we have right here. We form a high near range high, and then we sweep this high right here. So let's mark it out. So we grab liquidity above this range high, above this swing point, and then we break structure. Because this was the low that's being formed up until this rally up, and then it broke. So this is our market structure break. Then if we want to get in, we pull up our fib from swing high to swing low, like this, and we want to be entering around the optimal trade entry. And what do we have around the optimal trade entry? We have our last up close candle before shift the market structure at a key level. So this is a bearish OB. So we can enter a short at the OB with our stop above the high of the order block, and we're targeting the next logical draw on liquidity. So these lows right here, followed by this low. We got a fair value gap here and OB at range low. So this will be our target. This would have been a range high short. Now for a long scenario, we want to see something similar, but basically the exact inverse of it. So I want to see a low being formed, followed by a sweep of that low and a break in structure. Then we want to be entering a long. So right now, let's say we want to enter a long right here, and we know price is stalling at this level. So we wait for a sweep of a previous low and then a shift in structure. So we have a low right here that's being swept, and then price breaks structure as soon as it pushes above this last high. So we have this is the first down candle, and then we have a break structure right here. So what do? We enter. I'll scrunch up the chart so we can see it better. So we pull up our fib, swing low, swing high, We want to enter at the optimal trade entry, and look at the reaction. Beautiful reaction at the 0.79. So we enter a long, and our stop can go below the OB of range low. And what's our target? Well, we got a fair value gap right here, a little one. So this could have been our first target, and then we would target liquidity above range high. And that's how you can enter a long based on range low. And notice how perfectly price reacts on the mid-range as well. So we push above mid-range, and then it found support. We have another push up. We have a bullish OB right here at mid-range. Price retested, boom, goes for another leg up. And that's how you can trade your ranges. Another great example is when we take out the liquidity here, we form a high, low, take out liquidity, exact same scenario. We break structure, we got a bearish breaker, fair value gap, got previous range high, we can enter a short on a retest, and it goes to range low again. So that's how I trade my ranges, right? Cheers.